What's up, everybody? Dave Bartosiak here with another edition of Dave's Daily Dives, where we take a look at the market action from the trading day, take a look at some key levels that we need to keep in mind moving forward, and tons of other fun stuff, including 5 Zacks Rank #1 strong buy stocks that I give you, which are breaking out to new highs. So not only do you have some good macro perspective of what's going on, but you also get some individual stock ideas that you can invest in on your own and investigate further. So why don't we go ahead and kick things off here with the S&P 500. So of course, bottomed out prior to election day. Here I've got the actual cash S&P 500, so we can give you the, rather than looking at the futures, which I've been doing the last few days, I decided to look at the cash market. So here we've got a low of 2083 on February 4th. Then you get the highs here at 2395 on March 1st, and basically all the chopping around that has ensued. So as always, I like to draw my nice little fib retracement levels. What did I say, 2083? Yeah, we're good there. And 2395, what do we say? It's 2383. 2400. Boom. There we go. Okay, on the S&P 500. And you'll notice that we've been chopping in this sort of range here between the 23.6% retracement and those all-time highs. Now, the market continued to stay within this range, selling off a little bit today during trading, but we did not breach the low of yesterday, that 23.37 and a quarter. In fact, the low today was 23.41.18. So an inside day, really, because we stayed within the highs and the lows of yesterday, as the S&P just kind of squeaked sideways. One important note that I've been seeing recently is what's been happening to interest rates. Now, normally we take a look at the 10-year. We've been doing that a lot. But today, I figure let's look a little further out on the yield curve. Let's look at what's been happening with these 30-year rates. And again, you'll see a similar pattern where there's this run up in rates up until, about the second week in December. You can also see this on the Russell. If you took a look at that, you'll see this huge ramp up, and then all of a sudden this consolidation. We're just kind of chopping within this range, waiting to break one way or the other. Now, when you're thinking about this in terms of what's happening in the overall economic environment, you do know that the Fed has been increasing interest rates here recently, right? So you'd think intuitively that this should have an impact on the long bond, that these rates should be pushing up. But in actuality, we've seen the opposite, where rates have come down considerably from 3.2% on the 10th of March all the way down to 2.9% and threatening to go even lower here. What gives? Well, I think this is indicative of a larger sort of risk-off behavior that you're seeing in the market. Risk-off, you can think increased volatility, you can think whatever you want. We're seeing the VIX here, the SIBO Volatility Index, for several days in a row now has come higher. Now, granted, we're down at 15 and change on the VIX. Historically, that's not really all that high, and if you zoom out a little bit, you'll see there's plenty of times when the VIX spikes up above 20. So perhaps finally now we're going to get a spike here in the VIX, pushing it up above 20. I know the volatility guys would certainly love to see that happen. But overall, this is just saying that the market has been in a little bit of risk off lately. And you can also see that if you're looking in terms of the US dollar versus the Japanese yen. Now, the yen is the sort of global reserve currency. It is a risk off trade for sure. So in this case, I've got the dollar, the US dollar versus the Japanese yen, with the yen being the denominator, or the denominator here. So as the yen increases in value, you're going to see this pair drop. And that's what we're seeing here. You had yen weakness coming into December, followed by yen strength since then. And the market certainly has shown that. If we look at these retracements here, I want to do this from the lows of September sort of 27th to where we are to the highs. And you'll see that there was a little bit of support here at the 38.2% retracement of that level. That support level broke down really with conviction at the start of April, And then now we're here at this 50% retracement. Could definitely threaten lower. 107.22 is where we're looking at. That's the 61.8% retracement of that level. So just something to be cognizant of when you're looking at the dollar strength, you're looking at the VIX start to spike, and you're looking at the S&P 500. You could see a scenario where all of this sort of lines up, where this yen trade really starts to keep on coming down, where the S&P breaks through the bottom end of that consolidation range, and then all of a sudden we're talking about looking at the values that we saw back in November, so October and November. So that's something to take a look at. We're starting to get this little mini counter trend. Will it develop into a stronger trend? I'm not so sure. Okay, so let's take a look at 5 Zacks Rank #1 strong buy stocks now that are breaking out to the upside. We have Cohu. So these guys do basically in the semiconductor testing and handling business. They've been on a heck of a run here, a huge gap up on earnings into February, and really have not looked back. You've got the 50-day moving average providing support to the downside all the way down at 1626. Commodity channel index has been well above the zero line for quite a while here. Volume has picked up also, so this is what you love to see. A stock that had a huge move higher, volume pickup, and positive technicals. So this is all pretty good here. I think you can go long here. You can put a stop loss just under sort of the 1750 level, because you do have this previous swing high that could provide some support. Or if you're a little bit timid, you could wait for a little bit more of a retrace, especially if you think the market's going to sell off a little bit. And the 1650 area would be kind of a better area to gain some exposure there. So that was Cohu, ticker COHU. Next, I have Donaldson. So these guys are in the filtration systems business. Not the sexiest business in the world, but hey, it works. And if you look here, it's been a story of a consolidation, boom, gap up on earnings with another consolidation. So this one's really sort of chopping through. Even though this is a Zacks Rank #1 strong buy, that tells you that there's a compelling earnings story that's happening behind this. So analysts have been increasing their earnings estimates over the last several weeks on shares of Donaldson. Here, I'd be waiting, though, more for a breakout of this 46 level versus trying to get in at the bottom end of this consolidation range, because we've seen, just like on the previous quarter, where it broke down below into this gap up on earnings and then just kind of floundered a little bit before moving higher. So I think I'd just be waiting on the breakout there and play that. That's the easier way to play Donaldson, ticker DCI. Then we have Equity Commonwealth, ticker EQC. This is a REIT that invests in real estate market, primarily commercial office properties around the country. So this is something that you're going to see benefit if these rates continue in the direction that they are, because REITs are rate sensitive. Say that 100 times fast. REITs are rate sensitive, REITs are rate sensitive, REITs are rate sensitive. So you have a breakout here up above $32. Also coming out of this consolidation range, the 50-day moving average has provided some support along the way. That's pretty good. That's all the way down there at 31.17. So I think this is something that you can chase a little bit, and as long as you keep your stop sort of reasonable below this $31 level, I think things will be okay here for you on Equity Commonwealth. Again, ticker EQC. The next one I got for you is Fortis. So these guys are an electric and gas utility company in Canada, the U.S., and the Caribbean. Utilities, again, when you're thinking REITs, utilities, these are in that sector that should benefit from lower rates. And I know it's weird to talk about lower rates right now, especially since there's been so much hype about rates going up, and the banks have really rallied as a result of that, and now we're seeing kind of a counter trend trade to that. But this might be a good way to kind of buffer some of the other portfolio holdings that you might have. We have this breaking out to the upside here on not a lot of volume today, not very strong volume, but it's up above the top end of the October highs. So that is definitely a good thing to see here on the stock. So you can buy this, keep stops just below this, really this swing low here, this 32.5. You can put stops down here, and it's going to be a relatively smooth ride for you. Shouldn't be too much in the way of volatility unless these interest rates really start to work themselves around. The last stock idea I got for you is NME. N Incorporated. So they do high precision bearing components and industrial plastics and precision metal components. So this is more of an industrial stock. So kind of this is your Make America Great Again stock here, right? This is a Trump trade stock, domestic manufacturing, and they've done pretty well, obviously, since Election Day, pretty much doubling since then. So if you're looking for a stock that you think could carry over, this might be a good idea because, again, it is a Zacks Rank #1 strong buy, so you know you have positive earnings coming from that. Look at this commodity channel index. It hasn't been oversold since January 17th. Really only dipped below the zero line for a couple of days there as the stock found support at the 50-day moving average. So all sorts of fantastic positive things here going for NN Incorporated. All right, guys, that's all I have for you here today. Be sure that you are signed up on your Twitter and hooked up with Dave at Bartosiastics, BARTOSIASTICS. So thanks so much for hanging out with me here on another one of Dave's Daily Dives. I will see you all tomorrow. Have a good one.